Let's take a look at the first big fat earnings week after the banks have gotten us going here in Q4 2025. If you're new here, I'm Hema Reddy. I use price action, market timing, and momentum to boost my trading and that of our tribes. And what you can see on my screen here is my wealth charts. So this is an awesome software for trading. They also have brokerage connections. I'm getting going with it and I'm reviving my channel here with it as well. So I want you to follow me along as we look at the stocks that are reporting earnings tomorrow to see what are the key levels to monitor, any other important action, and also pull some takeaways that we can use going forward in our trading, not just around earnings time. So to do that, what I've done is set up this earnings window here in wealth charts. So you can see I put in the symbols from the S&P 500 because I'm a big ES futures trader, so I'm really focused in on those 500 stocks. And we had earnings that started dribbling out before the end of Q3, and now here we are in the middle of the list. So I'm going to look at stocks that are reporting earnings October 21st and later to get a sense of what's going on in the markets and what might be useful to monitor. So I'm just going to thumb through the charts and I'm only going to stop when something's interesting, okay? So I have one right out of the gate. So ticker ELV, Elevance Health. Now, I don't know much about this stock, but I can tell you right now, the way the price action's behaving is that it's in an uptrend. And this is always a really important thing to pay attention to. What is the trend going into earnings, right? Instead of being so caught up in what the earnings report itself is. We had a big base back here, a high, a higher low, a high, and now a higher low attempting to be forming. So I suspect that where this stock is now, it's got some room for upside, but obviously we've got to be extra careful around the earnings release. Now, I'm going to keep thumbing through until I see something interesting or a big name. All right, GE has a nice base going. Now, when you think of base, you might think, well, isn't that supposed to be at the bottom of the chart, Hema? Well, sometimes bases can form in midair. They're consolidation in an uptrend. So I expect that this move that we have between about 310 and 290 will resolve to the upside, especially because of the way that the momentum's behaving. So momentum, that's my indicator down below, the RSI power zones, that's the speed of the market, okay? This is my favorite way to be ahead of the trend. And I'm gonna have a workshop tomorrow afternoon, actually, October 21st. So join me live. If you haven't registered, make sure to use the link below to do that. And I'm gonna cover the speed of the markets, the techniques, how to recognize it, and even look at it on live charts. So again, speed of the market on GE is suggesting we've got some further upside. All right. Now, if I skip over charts, it's probably because they have either more to unfold in price action before they're useful to me, right? Like I wouldn't trade them right now, or they're in messy consolidation. Okay, Northrop Grumman. I don't know what's with this stock, but I get asked about it a lot. So this is one, ticker NOC, that is actually doing a great thing in that it's having a little relief moment, okay? Buyers taking profits. This probably was fueled by, industry or kind of broader conditions. But I want you to pay attention to something. Look at how the speed of the moves is dancing between these green zones. And that's been the case since back in early August, okay? So this market is really in a nice uptrend, and I think there's probably more room for it to turn higher as a buying opportunity versus it making its way back towards 570, okay? Awesome. So I'm just sticking to what's reporting tomorrow. And if you guys like this, I'm going to keep coming back in and doing it more often. So be sure to like this video down below if you haven't already and are getting value, and I'm going to keep going here. Okay, Coca-Cola, this is a big one. I prefer Coke over Pepsi, so let's take a look at the chart. All right, so I'm gonna just zoom into a little bit more action here because you can see that long-term we've been in sort of a downtrend since late April here, okay? And the red zones on the RSI power zone have really been dominating. And again, this is about the speed behind the moves. Price action is where the shares are going, right, in the case of stocks. But the speed behind the move is how fast or slow they're getting there. And that's why it's a super helpful tool. So based on what I see now, I actually think Coca-Cola has some resistance up ahead. So let me do a little math and I'll show you what I mean. So you see this line here I drew at about 69.50. That is important resistance. Now that's based on my forecasting techniques, okay? So this is where you're looking at the relationship in time between highs and lows and then planning or mapping where the market should go if that cycle remains intact. So for Coca-Cola, ahead of earnings tomorrow, if you've got any expectations of it to climb above 69.50, I would double check those, because between the momentum action, the speed of the market, and the price action, that's looking like important resistance up there. Okay, we got a couple more that I'm going to thumb through here. Oh, let's get back to that one. RTX Corporation doing nice things here, forming a little pullback and looks like it wants to shoot higher. We can also forecast on this one. Okay, I've got a forecast for RTX to trade up to 175. Now, a full forecast would also have a time component, all right? But I'm just kind of reintroducing these things here. I haven't done one of these long videos on YouTube in a hot second, so this is me coming back. Now, I need you to remember something. A forecast, okay, is a projection. It is not a guarantee. So I don't have a crystal ball, all right? I don't have skin in the game with the stock. I am just using the techniques I know to demonstrate on timely markets, right? All of these guys are set to report earnings tomorrow. All right, let's move along and look at a few more. And again, I'm only pausing if I see something kind of interesting. All right, Lockheed Martin has been trading within the range from, looks like October 15th. If it can get above October 15th high, I think it's on its way to a new move higher. And all of that is fine while we stay above the September 25th and 26th lows, okay? That's the platform. So when you have a bar that you see consolidation like this, all right, so let me make this a little bigger so you can see what I mean. Don't put all your bearings on the consolidation bar, meaning look at what's the highs and lows around it. So if we can get above the October 14th high, right, that's the high right before we started ranging, that's a good propellant for this stock. But if we get below the September 25th and 26th lows, that's a not good sign for this stock. Notice I used the October 15th range as why I zoomed in, but I'm looking at the surrounding highs and lows. Okay, so that's something useful when you see a market trading inside one bar. Don't get so married to that one bar. Look at what the resistance and support are around it. All right, let's end on a big one here, Netflix, okay? Set to report earnings October 21st at 4 p.m. Eastern. So for this guy, I'm gonna zoom the chart out and we'll do a little bit of multi-time frame analysis. So this is also a super important takeaway. When you are looking at any sort of analysis, especially of a stock, it is really helpful to go to the bigger picture. That's not where you have to take your trade, but it helps you have perspective, especially if it's moved a lot. So monthly chart of Netflix, you can see this like parabolic move, right? But we have had a decent pause. Now we can switch to a weekly and we can see that that pause has resulted in, working off overbought conditions, as I call it. Again, I'm going to go into this more deeply on Tuesday, October 21st at my session. That's right after Netflix earnings. And right now, Netflix is in a position that on the weekly chart looks like more aligned for a break higher. So let's look at it in the daily. And in the daily, you can see, well, we've really had a lot of ranging action. So I'm going to just throw some trend lines on here to show you what I mean. All right, we've had ranging going on since July 17th. Like that's the last high that we couldn't defeat. And then let's look at another line here. Back on May 12th. So think about it. The May 12th low formed, market went up, pull back, market went up again, okay? Then the July 17th high form, market went down, couldn't even revisit that May 12th range and has been sideways. So this again is my little pro tip for dealing with sideways ranges, okay? Yes, of course, the immediate boundaries are something to pay attention to. But if you want that extra confirmation, make sure you are watching the high before the highest high of the consolidation and the low before the lowest low of the consolidation. You can even put bands like a rectangle on here to look at the entire range of the day. And I'll show you what I mean when I meet you live on October 21st. So that's my take on some stocks reporting earnings coming up here into October 21st. If you found value of this video and you'd like me to do this style again, where we look at the day ahead, drop a like for me on this video. Oh, I just have a few more. Sure, I'll finish out the ones for October 21st just to see if anything's super interesting. Not so much. I think I covered the big guys, but let's end on EQT. Yeah. So I talked about what I found most interesting, and there we have it. So we have all the rest of earnings season laid out and ready to analyze. Again, I'm Hema Reddy, back to sharing this type of insights and analysis here in these longer videos. If you found value in it, please give it a like down below, and I'll catch you in the next video.